Hey guys, what's up? I know you've all been hearing the noise about the national debt, but have you actually grasped the severity of this specific fiscal cliff? You hear about the trillions, but today we're focusing on a concrete, immediate threat. Most of you have probably seen the headlines, but have you ever truly considered the consequences of this single financial bomb? In this deep dive, we're not just explaining the problem, we're laying out the survival guide. We'll analyze exactly how this crisis was engineered and, more critically, how you can navigate the fallout. Stick with us, because understanding this single crisis is the key to protecting your savings. Don't click away. Let's get right into the problem, the prognosis, and your defense strategy. The single greatest threat to your financial security isn't inflation alone, it isn't a stock market correction, and it's certainly not another political drama. It's the quiet, sophisticated fiscal disaster looming over the United States Treasury. For decades, the U.S. government has relied on a constant rollover of debt, operating under the dangerous assumption that lenders would always return. This assumption is about to be shattered. What we are facing is not just high national debt, it is a $300 billion time bomb, a specific, immediate, and unavoidable refinancing crisis that could ignite the next global financial catastrophe. This documentary will break down precisely what this $300 billion exposure is, why this narrow window of fiscal failure is more dangerous than the entire national debt combined, and what it means for the value of the dollar in the next 6 months. Chapter 1. The anatomy of the $300 billion exposure. The total U.S. national debt is a massive, abstract number that frankly puts most people to sleep. But this $300 billion figure is immediate and concrete. It's what we call a real pain point. This amount represents a critical block of low-interest Treasury bonds that were issued during the era of near-zero interest rates following the 2008 crisis. These bonds are now maturing, and the check is due. The government must now refinance this debt, meaning they have to borrow new money to pay off the old debt. The problem is simple, but deadly. The current interest rate environment is exponentially higher than when the original bonds were issued. Refinancing this $300 billion debt, along with trillions more due over the next year, means the U.S. government must now pay dramatically increased interest payments. This increase in interest alone is quickly consuming tax revenue that should be funding crucial sectors like defense and Social Security. The government is caught in a crippling financial feedback loop. They're borrowing more just to cover the cost of past borrowing, with the interest accelerating the collapse. This is where the term debt spiral comes into play. Chapter 2. The global lenders strike. The true existential danger of the time bomb isn't the number itself, but the possibility that global investors, primarily foreign governments, central banks, and major institutional funds, will refuse to buy the new bonds at the required interest rate, or worse, demand a higher yield that the US Treasury simply cannot afford to pay. Here's the skinny on the situation. Foreign holdings of US Treasuries have been declining for years, driven by 3 major factors: geopolitical tensions, the weaponization of the dollar through sanctions, and the search for better, less risky returns elsewhere, the whole de-dollarization phenomenon. If major creditors like China, Japan, or Saudi Arabia decide to significantly reduce their purchase of this new U.S. debt, the Treasury will be forced into a no-win scenario. They'll have 2 disastrous options. First, they could offer sky-high interest rates, effectively choking the U.S. economy by diverting massive tax revenue to debt servicing. Second, and the scenario that keeps high-level financial analysts up at night, the Federal Reserve will be forced to step in as the buyer of last resort, meaning they will effectively print the money necessary to finance the debt. Chapter 3. The hyperinflationary trigger. When the Federal Reserve is forced to print money to finance the debt that global investors refuse to buy, it acts as a direct, non-stop siphon of value from the US dollar. This is the game changer. This is not the gradual inflation we are accustomed to. This is the trigger for hyperinflation. Money is created without any underlying economic growth or productivity. flooding the market and dramatically reducing the purchasing power of every dollar, savings account, and fixed income pension you own. This $300 billion refinancing crisis acts as the initial tremor for this seismic event. Furthermore, the collapse of confidence in U.S. debt will likely trigger a massive sell-off of existing U.S. assets globally, leading to a profound economic contraction while prices for basic goods skyrocket. The average person will see their savings halved in real terms, not over a decade, but potentially over a single year. Conclusion and call to action. The $300 billion time bomb is a real and present danger, representing the moment when the U.S. government's structural financial habits collide with the hard reality of market interest rates and declining global trust. This crisis is not about politics. It is about pure, ruthless mathematics and confidence. The time for doom scrolling is over. Protecting your future means understanding that the stability of the dollar is no longer guaranteed and strategically repositioning your wealth into scarce, non-dollar denominated assets. This fiscal storm is gathering pace, and only those prepared to acknowledge the debt crisis's true mathematical impact will navigate the coming financial chaos. If the analysis in this documentary has truly opened your eyes to the forces reshaping your financial future, then join our community. Subscribe to the Future Synthesis channel now so you don't miss our deep dive analysis into the technologies and policies that will redefine our world economy. Like this video to signal to the algorithm that this critical information needs to be shared, and share this with one friend who you believe deserves to know the truth about the $300 billion time bomb. We will continue to explore the edges of finance, AI, and global power. Stay sharp, stay informed.